Per usual, living on this channel is for educational purposes only, is not intended as financial advice. It's been a while since I've talked about Bitcoin, longer since I've talked about ETH. If you want to see more content from me on other mediums, check me out on Twitter. I do a weekly live stream with Ledger on Twitch. I do daily videos and articles for BraveNewCoin. I'll leave all the links for that in the description below. So, where are we on the ye old look into Bitcoin stuff that I think is basically the most important thing to look at right now? Other than TA, of course. So we'll start with the 2-year MA multiplier. The green line is the 730 2-year MA. The red line is 5x that. Historically, if we're above the red, it's a selling area. If we're below the green, it's a buying area. We're fastly, swiftly, quickly approaching the red area. We have not tapped it yet. So all this still looks fine, still looks bullish. I have no qualms or concerns with anything here. Seasonality wise, Q1 is generally just garbage, flat, or slightly up. Q2 and Q4 is where everybody makes the moves historically based on seasonality for BTC, as well as for ETH. It's basically ETH is Q2. ETH BTC does best in Q1, seasonality wise. So it actually makes sense why ETH is doing well here if you are a believer in seasonality. I'll talk about that at the end, but looking at where this sits on the 2-year MA multiplier, I don't think there's any concern for anything really. This is going to keep moving up because prices moved up pretty quickly. So right now the ceiling is basically 52 and above, and that's going to keep moving up. 200-week moving average heat map, which just says how fast the 200-week is moving up. Historically, if it's moving up quickly, that's a sign of the top danger zone. Not there yet. So again, this looks fine. Puell Multiple based on coin issuance, notional versus coin issuance over the past year. Notional, historically, danger zone, buy zone, or sort of in between that. We were quickly approaching that. We pulled back some. So all this still looks fine. It's, what is it, 2.1. So I am in a state of uncaring where price sits here at the moment as far as being worried that this is the top based on these metrics. Stock to flow, we were actually outperforming stock to flow briefly. We're now still very close to it, but kind of underperforming slightly. No big deal there. You know, if you believe in stock to flow, if you don't, whatever. If it ends up working out, great. But I think most people with half a brain aren't really believers in stock to flow. That's coming from a guy who believes in TA. Here's the logarithmic growth curves. They have called the exact top almost every time, you know, barring this to the dollar, right? Like, what else do you want in an indicator? We're currently hovering in the median of that. And if we zoom in on the top, it's above 100K. Now, this may take 2 years. This may take 30 days. You know, I don't know. I'm just here. I'm along for the ride. I'm watching the same movie you guys are watching. But if we get anywhere close to this, I will be selling. You can have all my Bitcoins for that, because I'm looking at this and I'm saying to myself, this has been perfect at calling the tops and bottoms barring March. Okay. Perfect. Why would I ignore this? I'm not going to. You know, you tell me to have fun staying poor, right? That's fine. Here's the MVRV. There was some concern on the velocity, the swiftness that this was moving up, that we were going to basically go up too much too soon. This is another type of on-chain metric based on how much is moving on-chain, and that has pulled back significantly from 6 to 3.6. So basically a 50% drop in that. So that's all this is telling me, is there's plenty of more room for up. We are resetting everything that we need to reset as far as the on-chain metrics and some of this high time frame TA stuff. If we switch gears to Bitcoin days destroyed and or unspent transaction outputs, however you want to think about that. Historically, if we get a lot of new unspent transaction outputs, so if a lot of coins are moving relative to the total, so can think of it as like the float. If a lot of coins are newly moved, that is usually a sign of a top. So if the orange basically engulfs most of this chart, then that's been a top historically. And we can zoom in on that. If we look at December 2017, I'm specifically looking at the 1 to 3 month right where my cursor is there. That's the band I'm focusing on most of the time. So right now we're at 12%, which is actually the most concerning thing I'm seeing across the board based on on-chain stuff. Because if this goes historically above 13 to 15, that's usually been it. I mean, this was the top in December 2017. We got to 12.3%. We're at 11.97%. So a bit concerning, certainly. This typically indicates just a lot of churn, a lot of holders selling, a lot of people buying as well, new players, custody, whatever you want to think about that as. But this is just it's a lot of coin movement, and that historically is not good. You don't move coins to an exchange to sell them. You don't move coins to do anything other than sell, for the most part. Now, this could be a different situation. There's a lot of institutional custody, blah, blah, blah. But historically, that's not been a great sign for the bulls. If we look at CME futures contracts, I'll start with this because it's the 29th. Today's the big day of the expiry. Everything rolls over. There's a lot of chop. It's chop city, chop suey. Elon tweeting about Bitcoin passive aggressively. All this stuff is just part of the game because, to me, I'm looking at the 29th, and the week before any expiry is basically anything goes, anything can happen. You know, we can go up. This is basically a G candle. October 25th, 2019, there was a similar situation where we went up for a few days and then just sold off, right? If you look on this in lower time frames, very similar situation. But the good news is once this week is behind us, we can move forward to ideally less volatile times with the next expiry on February 26th. So we kind of have a month between making something real or not. At the same time, we have to keep in mind this is Q1. Q1 has historically been flat or negative, and to expect like a massive bull move here, I think, is a little unrealistic. Looking at the weekly cloud now, if I'm looking for a level, if I'm out here saying where do I want to buy, where do I want to get back in, where do I want to set bids, where do I want to go long on leverage, at this point it's between 20 and 23. Why? Because that's where the weekly Kijun is, and that's where the weekly 20 SMA is. If you look at the historic levels, you can see where we've hit that multiple times, and if you zoom way out, you can see all that. So that may seem crazy. It's a massive drawdown. It's a massive percent. I don't care. That's where the supports are. I don't make up the levels or the rules. If we look at the daily cloud, we've actually Kijun bounced twice now. I didn't play the second one because I usually don't. Typically, if you slam on supports or resistances multiple times, they become less consistent. So to expect another touch of this and a massive bounce, I think, was unrealistic, even though it happened. Even though if you zoom in on this, it's a double bottom, and we don't know Elon's going to talk about Bitcoin, obviously, but if you're just looking at TA, that was a good bounce spot. So going forward, though, in the next few months, leading into Q2, there's a high possibility of this edge-to-edge move from 31, 32 to 26. Similar cloud fractal on gold as well on the weekly chart for the cloud there. So all this to me looks like Q1 seasonality, right? All of the on-chain stuff I talked about, coupled with this actual TA setup that I'll be watching and playing and trading, tells me be careful on the long side here. This is the 4-hour cloud, and regardless of sort of what happened in the past 8 to 12 hours, the 4-hour cloud still wasn't bullish. So for me, that's not an entry. I'm waiting for everything to be bullish on the 4-hour for a long entry. Good news is it's going to be obvious because everything was bearish, and when everything flips bullish, that's just a long entry. Doesn't matter where price is or where it's sitting or what I think about Q1 seasonality. That's just how it is, right? If you're trading a system, you just follow the system. If you're watching the 4-hour, there's no reason not to take that long trade if that flips bullish. This is the massive pitchfork. Again, more evidence for 20 to 24. There is a yearly pivot there. There is the cloud or pitchfork median line there. So there's tons of reasons why there will be support there should we decline significantly. Not saying I'm expecting 20 to 24. Honestly, I'm expecting a touch of 26 this quarter. 20 to 24 would be asking a bit much. Most likely, but it's not unexpected. All right, let's look at the daily ETH cloud, switching gears here. Bit of a TKC clamp, some cloud stuff showing, the possibility of 1100 to 860 or whatever this edge move is, but that's a long ways away. This TKC clamp isn't even that big as far as just eyeballing it. But if we do drop, you're expecting a bounce on the Kijun or a touch of the Kijun, support of the Kijun, which is like 980, something like that. Massive percent down from here though. Here's the weekly ETH cloud and 20 SMA just like BTC, and that's kind of painting 650 to 850 as far as if we really sell off. That's where I'd be back buying again. And keep in mind, these aren't like targets I'm expecting. Just here's your decision tree, right? Let's say we sell off 20%, 30%, 40%. Sky is falling. Where do I want to buy again, right? Like that's what I'm looking at here. The most concerning thing for me on ETH is the pitchfork, because it is at the top of the range. And if you're trading a pitchfork as a pitchfork, you're selling up here, you're buying down here, you're expecting price to tap the median line over and over and over again. So we have the median line there, we have the yearly pivot there, we have the 200-day moving average down there, which is going to move up slowly over the next couple weeks, but it's going to be all in this area. So just like BTC's 20 to 23K, I really like 500 to 600 as far as a rebuy for ETH. Now that is an over 50% drop, right? If that happens, that is going to be a nasty, nasty set of candles. So I don't know if that actually is going to materialize, right? But if it does, I'll be ready. Here's the 1 year MA multiplier. So this is the 1 year MA, just because there's not enough data really for ETH to look at it. And this is the MA multiplier up here, and it's sitting above the median line, which I read as bullish, and it likes a target of basically 2,000 plus. This is going to keep moving up as well. If you look at the 4-hour cloud, it's a mess, right? When I see this, I'm thinking, okay, is there a B-band squeeze? Is there consolidation going on here? Is this like coffee and distribution? What is this? To me, this best fits an ascending triangle, because we have a series of higher lows with basically a flat horizontal resistance. You can say as well, we keep making these Adam and Eve fractals. Adam, Eve, Adam, Eve, Adam, Eve. And when I see this, there's nothing, I can't like flip that, right? I don't see patterns upside down here as far as bearish in any way. There's no head and shoulders here, right? There's nothing. So to me, the best fit is ascending triangle, which holds a bullish bias, in this case, bullish continuation. You would trade this as a breakout trade, anything above 1430 on stamp spot in this case, and you'd be targeting 18 to 2100, 1750 to 20 to 2000, something like that. It does have relatively descending volume. It's not perfect, but to me that's the best fit here. I wouldn't call this a rising wedge. We're not getting higher highs here. We're not getting a rising channel either, really. It's kind of just flat at that level. So definitely a bunch of mixed signals here as far as what's going on in the quarterly, what's going on with Legacy, AMC, GME, the nonsense everywhere else. Just everything's a madhouse, right? And I'm trying to be on my deserted island, just looking at the TA best I can. So for BTC, I am a little concerned at the UTXOs. Everything else on-chain wise looks fine. If I'm actually trading this, which will be on the 4-hour, if this flips bullish on the 4-hour, I'm just going to treat it as a long, keeping in the back of my mind that I'm expecting some sort of short entry trade over the next couple months with a remote possibility of 20 to 23K if things get ugly. And then for ETH, I'm just watching this ascending triangle big time, with the back of my mind saying that the top of this is probably like the cycle top could be between 18 and 2K based on the MA multiplier and based on the pitchfork, which says be super careful, go along up here. So that's all I have for this one. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.